banks really showed that they're having margin compression. So as interest rates fall, it means they charge less in their mortgage payments and in their interest payments for people who borrow money from the banks. And that is coming through in their lower NIMs, net interest margins. So the difference between what they borrow at and what they lend at is smaller, and that means their revenues are coming up. And one of the reasons why they're cutting jobs as well, because if your revenue number goes down, you have to match it with your cost line. So they're going through, and you're seeing a lot of redundancies come through across the banking sector, and it's really indirectly resulting because of lower interest costs, and also there's no growth in the banking sector because it's such a mature industry. And one of the reasons why we do suggest people to kind of maybe start to think about taking some profits on their banks. I'm not saying sell your banks completely, but take some profits and reallocate to some more higher income names, but also diversify your portfolio, because some clients have such large positions in the banking sector without really realizing, because they've gone up so much over the last 30 odd years or so. It's important just to kind of recalibrate a bit, particularly as rates start getting cut, because the growth is not there for them and the cash flow is also declining. So yeah, it's definitely a dangerous position to be, is overexposed in banks. CSL and Hardie, they were the biggest surprises. They came off heavily. They're large index stocks, meaning they're held by the major institutions. A lot of the passive ETF funds also hold them because they're big positions. And that caused a lot of market volatility. CSL drove down the healthcare sector by 12% in that month. And it has a big impact. So what instos have been doing is obviously they have to sell out of CSL to reduce their risk and reallocate into other names. So it caused a lot of volatility ripple effects across the market, and it's still kind of coming through, because an insto selling its position in CSL doesn't happen like at day one. You don't just sell your stock. Because of the liquidity and selling a position and lowering it takes like weeks to come through. So we do expect some negative sales pressure to be in those share prices for a little bit longer, until we get those institutions to re-weight their positions in those healthcare and also James Hardie space.